Welcome to our group. So, today we are going to explain process costing. First of all, I introduce our group members and they are explained titles. Firstly, introduction part explained by me. My name is Dasu. Secondly, future and application of process costing explained by Taman. Third part is process costing versus job costing explained by Jayani. Fourth part is accounting procedure explained by Dilshima. And last part, example explained by Sahini. Okay, first we are going to introduction part. Introduction. Process costing is generally a form of costing in which we divide the overall cost of production into specific cost on individual process. We take cost of each stage separately, that is included in the manufacturing sequence. Critical process costing characteristic. First, final product is obtained. The production process does not stop until the final product is drawn out of the line. Second, two or more process operations. There are two or more process operations that participate in the production of the final product. Third, becomes the raw material for the subsequent process. The raw material of one process becomes the output of the other process. The process of this chain continues until the final goods are realized and dispatched to the warehouse.
I am going to talk about features of process costing. The main characteristic of process costing. First one is standardized product. Second one distinct process. Third one costing by process. Last one calculating cost per unit. First characteristic standardized product. The product made using this method are standardized and homogeneous. That means they are all exactly the same like sugar or oil. Second one, distinct process. Every single step or process in manufacturing is distinct and predetermined. We know exactly what each department need to do and in what order. Third one, costing by process. Process costing is simple put the costing of process costs are collected for each process separately. This helps us figure out the total cost of the product at each stage. Last one, calculating cost per unit. The cost per unit produced in is an average cost. We'll calculate it by taking the total process cost and dividing it by the number of units produced in that process. Application of process costing. So where is this method used? The process costing method is best suited for industry that produce continuous identical product. It is adopted in the following type of industry: soap making, oil refining, biscuit manufacturers, milk dairies, textile mills. Next slide will do Jayani.
Process costing versus job costing. Production. In process costing, there is continuous production of a standard product. Products are of uniform variety. This one unit is similar to the other. In job costing, production is against specific orders and individual specifications. Therefore, each job is separately identifiable from the other. Difference between job costing and process costing. Job costing. Costing method used to determine the cost of products produced as per customer's order. Applicable for unique products with small production. calculates the cost of each and every job. Cost cannot be transferred to another job. Process costing. Costing method used to determine the cost of each process and operation. Applicable for has been adapted products with large production. Calculates the cost of each functions and processes. Cost can be transferred to next process. Cost escalatement. In process costing, costs are accumulated for each process for a period. Costs are confirmed for each job under job costing, time or period being unimportant. Transfer. Transfer of cost from one process to another is made in process costing as the product moves from one process to another. There are usually no transfers from one job to another unless there is a surplus work or excess production. But in job costing, the costs are generally not transferred from one job to the other. Next slide will do Dilshima.
There are six major activities in the process costing. Each and every process has a distinct activity. Every process is connected to the final output. Separate process account. A separate operational account is opened for each an account. Information is presented according to each process. We are going to consider the inputs we add to the process, the cost of those inputs, and what outputs we get from the process. Debiting process expenses. All process costs, materials, labor, and overhead are categorized. To get the total cost, elements of cost are calculated. What are the materials, labors, and overhead you have used for the process? Those costs are directly debited to the relevant process account. Crediting residue, wastage sales. The amount received from the sale of residue or byproduct or wastage from the process is credited to the process account. Crediting process losses. The loss occurred during the process is credited to the process account. Final result and transfer. The final balance of the account shows two things: actual cost of each process and the quantity of product. This quantity and its cost are then carried forward to the next process account. Calculating cost per unit. Calculate to find out how much it costs to make 1 unit by dividing the total cost of the process by the total output produced. Next, Sahini will explain with an example.
This part learn about how to calculate costing process. So we can give some example. Question 1. The manufacturing company has two processes in its manufacturing factory. Output of process 1 becomes the input for process 2 and process 2 production is ready for sale. Expected loss in each process is expected to be at 10% of input material of each process and scrap value is 2 rupees per unit. Relevant information for period Y is given below. Process 1 shows input material 2000 units and 8100 rupees. Transferred to process 2 1750 units. And labor and overheads 10,006 rupees. Process 2 shows about at materials 1907.25 rupees. Labor and overheads 22,000 rupees. Output to finished goods 1600 units. Prepare the following accounts. Process 1, Process 2, normal loss, normal scrap value, abnormal loss and abnormal gain. This slide shows about Process 1 account. Its debit side shows raw material 2000 units and its amount is 8,100. Labor overhead amount is 10,006 rupees. Its total amount 18,094. Total unit is 2,000. So credit side shows about normal loss 200 units, price is 2 and it amount 400 rupees. Abnormal loss shows 50 units and it price 9.83. It amount is 491.5. Output for process 2 shows 1750 units. It price 9.83. Its amount is the 17,202.5. Its total amount 18,094. Its total unit 2,000. This slide shows about process 2 account. Its debit side shows about transfer process 1 1750 units and it price 9.83. It amount 70,202.5. Labor overheads amount shows 22,000. At material amount shows 1907.25. Abnormal gain shows unit 25 and its price 25.87. Its amount is 646.75. Its total unit is 1775 and its total amount 41,742. Its credit side shows about normal loss. Its unit is 175 and price is 2. Its amount is 350. And output to finished good shows about 1600 unit and its price 25.87. Its amount is 41,392. It shows total unit is 1775 and its total amount shows 41,742. After that, we can calculate the normal loss account. This slide shows about normal loss account. Normal loss account debit side shows about process 1. Its unit 200 and its price 2. Its total amount is 400. Process 2 shows unit 175 and its price 2. Its amount is 350. Total scrap value unit is 375 and its total scrap value amount is 750. This slide shows about abnormal loss account and abnormal gain account. Abnormal loss account debit side shows process 1. Its price is 491.5. Abnormal gain account credit side shows process 2. Its price is 646.75. First, we can calculate process 1. Expected output 2000 units minus normal loss 200 units. Answer is 1800. It is the output after the normal loss units. Output after the normal loss units minus actual output of 1750 units. Answer is 50 units. It is the abnormal loss. Then we can calculate the total cost. Total cost equal to raw material plus labor overheads equal to 8,100 plus 10,006. Answer is 18,106. Next, calculate the normal loss units. Normal loss units equal to 2000 multiplied by 10%. Answer is 200 unit. Next, calculate the normal loss scrap value. Normal loss scrap value equal to 200 units multiplied by 2 rupees. Answer is 400 rupees. Next, calculate the net unit equal to 2000 units minus 200 units. Answer is 1800 units. Next, can calculate the cost per unit. Cost per unit equal to total cost minus normal loss scrap value divided by net unit equal to 18,106 minus 400 divided by 1,800 equal to 17,706 divided by 1,800. Final answer is the 9.83 per units. Then we can calculate the process 2. Expected output equal to 1750 units minus 175 units of normal loss. Answer is 1575. It is the output after the normal loss. Process 2 shows actual output is 1600 units. Then we can calculate the abnormal gain of 25 units. After that, we can calculate the total cost. Total cost equal to raw material plus labor overhead plus add material equal to 17,202.5 plus 22,000 plus 1,907.25. Answer is 41,109.75. After that, calculate the normal loss units. Normal loss units equal to 1750 multiplied by 10 percentage. Answer is 175 units. Next, calculate the normal loss scrap value. Normal loss scrap value equal to 175 units multiplied by 2 rupees. Answer is 350 rupees. Next, calculate the net units. Net units equal to 1750 units minus 175 units equal to 1575 units. Next, calculate the cost per unit. Cost per unit equal to total cost minus normal loss units divided by net units. Total cost price is 41,109.75 minus 175 divided by 1,575 equal to 40,759.75 divided by 1,575. Answer is 25.87 per unit.
Conclusion. In this presentation, we discussed what process costing is, its key features, how it is applied in industries, the differences between process costing and job costing, the accounting procedures involved, and a practical example. Understanding process costing helps business track production costs more accurately and improve cost control in mass production environments. Thank